Let me explain the new Nigerian tax law in the most simple way so that you can understand. If you live in Nigeria, you work remotely, you run a business, or even earn from social media, these new tax systems will affect you. So in this video, I will explain everything about the new Nigerian tax law. Please do me a favor, hit the like button, subscribe, and let's talk about the new Nigerian tax law and how it affects you. Why the new tax law? For years, Nigerians have complained that our tax system is too complicated. It is unfair and full of loopholes. And you will see big corporations, they find way to pay less tax or even don't pay any tax at all, while many small earners are overburdened with tax. So in 2025, the government passed a full reform, the Nigerian Tax Act 2025, which will officially start working in 2026. So the new tax system is aimed to simplify taxes, simplify the way we pay taxes. It's also to reduce duplications. For many years, people have been paying multiple tax, a tax here and pay another tax here again. So they are looking for a way to reduce duplication in tax system, and it's also to protect low-income Nigerians. Now think about those who are earning very little money. It's to protect them from paying little or to no taxes. It's also encourage compliance. If the tax system is good, if everything is regulated, people will likely pay tax. It is also to bring the tax system to digital age. Gone are those days when everything is just paperwork. They begin to bring the tax system to digital age, so that people can be able to pay their tax easily, to access everything about the tax easily. And basically, they are saying if you earn more, you should pay more taxes. If you earn little, you should keep more money. So let's start with individual. The individual like me and you. The new tax system threshold. If you earn 800,000 naira, if you earn 800,000 naira or less than this in a year, that is roughly about, that means if you earn about 66,000 naira every month, you now pay zero tax. So if you earn 800,000 naira or let's say 66,000 naira every month, you pay zero tax. And this is to protect the low income class. But there is a real game changer, and that is new progressive tax rate. Now, let me tell you how it works. The new progressive tax rate simply means the more you earn, the higher your rate, but only for the extra money in that range. Let's say your annual income is between 0 to 800,000 naira. Here, you will not pay any tax. This one, you will pay 0%, no tax. Now, let's say you now earn 800,001 to 3 million naira. Here, you will pay 15% tax. From 3,000,001 to 12 million naira, you will only pay 18%. The category of people here are called the middle earners. So they pay 18%. Now, what if you now earn 12,000,001 to 25 million naira? Here, you will pay 21% because you are an earner, higher earners. You pay 21% as an higher earners. If you now earn 25,000,001, if you earn 25 million to 50 million naira, here you will pay 23% tax. You pay 23% tax here because you are a wealthy earners. And if you now earn above 50 million, if you are the Odogu, you earn above 50 million, the government is expecting you to pay 25% tax. Let's make it very, very clear. If you earn, let's say you earn 5 million naira per year, this is what you earn per year. Now, the first 800,000 naira, from here is completely tax-free. The first 800,000 you earn is 0% tax. Now, the next 2.2 million naira here, the next 2.2, you will pay 15% tax. You pay 15% tax. And the remaining 2 million naira here, you will now pay 18% tax. So simply like that. That means your total tax is not carry 18% or 25%. It's a fair mix. It's a mix depending on your income bracket. So this approach is fairer and encourage honesty in income reporting. And now let's talk about the tax on digital income. For the first time in Nigeria, if you earn from YouTube, TikTok, freelancing, cryptocurrency, you earn from Facebook, or you do any remote job abroad, that income will now be taxable. That is, if you are a Nigerian resident. Before now, most digital workers were invisible to the tax system. But from 2026, those inflows from your Fiverr gigs, from Upwork, your AdSense accounts, all your online earnings, they now count as your taxable income. So that means all your celebrities, all the creators, the influencers, the remote tech workers, you are now officially on the tax radar. This one is very interesting. The rent relief deduction. Now, you can deduct a part of your annual rent before calculating your taxable income. So although it is capped, there's a limit on the amount you can deduct from your tax. But it helps those paying rent in expensive cities like Lagos or Abuja. So that means if you live in an expensive place where you pay rent, there is now a good chance for you to deduct some rent relief from your tax. Also, pension contributions, life insurance premiums, and health insurance still count as valid deductions. So you can remove them. You can remove those amounts from your taxable income. Another important part is the tax residency. Who is a tax resident in Nigeria? If you live or work in Nigeria for more than 183 days in a year, or you have strong family and economic ties in Nigeria, you are considered a resident. That means your worldwide income, even money you earn abroad, may be taxed in Nigeria. So non-residents only pay tax on income made inside Nigeria. Now, let's move to business. This one affects both small and big companies. Now, let's talk about the small business. If your companies earn 50 million or less than this amount in a year, if your total turnover is this 50 million naira or less than 50 million naira in a year, and your own assets, all your assets combined is also under 250 million, you are exempt. That means you will not pay tax. You are exempt from the company income tax, the CIT. You are exempt from the capital gain tax. You are also exempt from the new development levy. This is a very huge relief for startups, for the micro businesses, and for the small shop owners. Now, the corporate tax adjustment. The big companies still pay the normal 30% corporate tax. But now there is a new rule called the minimum effective tax rate. Minimum effective tax rate. It means no big company can use loopholes or accounting tricks to pay almost nothing in tax. They must pay at least a set minimum, no matter how they manipulate expenses. There is also a development levy, a new levy of 4%. It is called development levy. This will apply to larger companies. This also replaces several old, smaller levies. So all the small levies you are paying as a company, you will not pay them again. You will only pay this 4% development levy. This is designed to simplify the system, not to overburden businesses. And now, let's talk about the CGT, capital gain tax. Before, everyone paid a flat 10% tax on profits from selling assets like land or shares. But now, individual will pay based on their income bracket. So your capital gains are taxed using the same progressive rates as your income. The more money you make, the more capital gain tax you will pay. The next part is the value added tax. VAT. The VAT still remains at 7.5%. But the good news is this: more essential goods and services are now zero rated or exempted. This includes basic food item. So if your industry is in the food items, the basic food items, you may not pay tax. Education materials also exempted. Public transports are exempted. And also medical supplies are also exempted, and renewable energy products. That means essential daily needs will stay cheaper. Only the luxury or non-essential goods attract the VAT, value added tax. So what does all this mean for everyday Nigerians like you and me? If you earn below 800,000 naira a year, you are tax free. If you earn a decent income, you will pay a fair part of tax, a clearer percentage. If you rent a home, you can now get a relief for that. You can get a tax deduction for paying your rent. If you're a digital worker or freelancer, you need to report your income, but you also benefit from formal recognitions that this is what you do. If you run a business, you're also getting major reliefs. This idea is just to make Nigerian tax system fair, go digital, and also become more transparent. So these reforms has combined all old tax laws. We have the PITA, the VAT Act, the Company Income Tax, the Capital Gain Tax, and the Stamp Duty Act. It has combined everything in one single modern tax framework. The key problem here, the key challenges I see here is implementation. Can Nigeria truly automate tax collection? Can it stop corruption and ensure fairness? That is what everyone is watching for. Thank you again for watching this video. Drop your thoughts in the comment below. And don't forget to like this video, subscribe for more finance updates, and share this with your friend. And I see you in the next one.